Hey guys, hopefully everyone is doing well. Today's target is to solve question number 15. The chapter which we are related with is company financial statement. One thing I would like to share, this today's question is so splendid for learning purpose. It is requested to you all to be very much attentive and spare some time. Sparing some time, why I am asking, because you can see the length of this question. This whole side is only trial balance. It is not just visible in one screen. You can see how much bigger this trial balance is. So for learning point of view, it is so important. One full side is trial balance and one full side is adjustments. And you can see these are 11 adjustments. Perhaps for the first time we have got 11 adjustments. And these adjustments are not conventional, little bit different. Plenty of elements are present in it to learn. Secondly, at left side when you will see two totals are available and two separate columns are also visible. When totals are available, it means it's a trial balance. So little bit in comfortable situation we are, where we have debit side and credit side. It means assets and expenses are present on this debit side. Liabilities and incomes are present on credit side. So both are segregated in group wise. Performa is ready. On left side we have three parts. First part would be used to calculate our gross profit. Then we have indirect side. This would be used to calculate our net profit. Then finally third part, relatively smaller part, it would be used to calculate appropriation balance. Then this appropriation balance would be transferred to liability side, where fixed liability and current liability would be added in reserve to get grand total of liability side. This grand total would also be the total of balance sheet. Last, at final stage, we will be recording all related items of fixed asset and current assets. Then investment. Sum of these three would be the sum of total assets and ultimately sum of balance sheet as well. So guys, in this way, the overview of question is in front of you, and I'm sure that you people are mentally prepared that there would be a little bit extra time required to solve this question, but I am very hopeful, rather I'm sure that you people enjoy it, and you will, we all, not you people, including me, we all will be learning in a better way. So our view is completed. We are ready to solve our question. But beside that, please understand adjustments are given separately. These were supposed to be included in trial balance if everything is normal. But now they are given separately. It means each of these adjustments, if it is not included in trial balance, then we will have two effects. And secondly, please keep it in mind, we are not going to start our question from here. Rather than if adjustments are present in question, we will start from here. So we are ready to start. Let's begin. First, closing stock. So we'll go to cost of goods sold direct side, and here first we will mention opening stock, then we will add purchases. After that we will subtract returns, then we will be subtracting closing stock as well. And we are talking about this closing stock amount of which is mentioned as 142,500. So let's write 142,500 in direct side. At the same time, this closing stock would be added in balance sheet as well. So here closing stock amount of which is 142,500 we have written in current asset side as well. It was told that each adjustment would have two effects, and you can see in this way we will complete two effects, one on left, Direct side, one on right balance sheet. First adjustment is completed. Now second, purchase include 5,000 of goods, article of free distribution. Free distribution journal entry we are well familiar with. Free samples to purchase. That means purchase is decreasing. According to journal entry and concept wise, when you will give your commodities, goods and merchandises to someone, purchase would be decreased or raw material would be decreased. Here we will mention its free sample. Amount of free sample is described as 5,000 mentioned over here. Now, what would be the second effect? When we are given these commodities as free sample, obviously it would be considered as your expense. So free sample of 5,000 would also be mentioned in operating expense side. Two adjustments are completed. Now number 3. Salaries and wages include 2,000 being wages incurred for installation of electric fitting. Electric fitting have been recorded under furniture. So there is a mistake. Actually, this amount of 2,000 was not supposed to be added in for salaries. So what we will do, we'll go to operating expense side. Here we will mention salaries and wages. That wrong included would now be excluded. Wrongly included amount, and that was I think 2,000. Look at here. Wages, salaries wages include 2,000, which was actually for amount for the furniture. So why we have added salary in salaries? Now this mistake would be rectified by subtracting 2,000 from salaries, and where actual place of this 2,000 was, it is mentioned originally it was to be added in furniture. So we will add now, add installation of 2,000. Alright guys, two steps of adjustment number 3 is completed. Now number 4. Bill receivable include 1,500 dishonored, 50% of which is irrecoverable. Irrecoverable would be considered as your expense because irrecoverable are considered bad debts. So you will write bad debts over here, amount of which would be decided over here. Total irrecoverable 1,500, but 50% were bad. So here 1,500 total amounts irrecoverable, then take 50%. So only 750 would be considered bad. Total 1,500 and 50%. Now we will be doing its second effect. Just come over here. We'll see bill receivable. Then we will subtract irrecoverable. Or they might be considered as bad debts. Amount of which we have decided is 750. Alright guys, actually accountants are not well attentive to spellings. Receivable, bills, oh god. So bill receivable, let's irrecoverable bad debts, both effects completed. One you can see is present on operating expense side, then we will subtract it from bill receivable 750. So here let me check once again, although I don't want to be attentive to these spellings, but when I have seen it, receivable, that's not a good thing. So there is an extra E. Alright, so bill receivable subtracted irrecoverable, both effects are completed. Now number 5, bill of rupees 2000 maturing after December 93. Look at here, our date is December 93 and this bill is going to mature after December. So if date is not due, you are not needed to make any effect of this adjustment. So please open your ears. You can skip this adjustment number 5 because it is maturing after our due date. Number 6, charge depreciation on 20%. So here there is a debate. There are two methods of depreciation. One is called diminishing balance method, second is called original cost method. So here come our furniture cost less depreciation of 15,000. Note it down, this is your diminishing balance 35,000. While if you want to make it original cost, what you will do? You will add this depreciation 15,000 in 35,000 to get original cost. On the other hand, 20% rate is mentioned but method is not mentioned. So let me tell you what you will have to do. 35,000 is final cost. You are needed to charge depreciation. So less depreciation according to first method, that is fixed base method. For this what you will do, you will take 35,000 and then you will add 15,000 of previous year depreciation and this wrongly included 2,000 you will add and then you will charge depreciation of 20%. So this is your first method of depreciation. Then possibly let's take it downward side and here we will discuss another method of depreciation. You may call it 2. This is fixed base method. I am going to write over here for the time being. Fixed base method. And here we will discuss diminishing or declining balance method. Here what you will do, you will be taking diminishing balance which is 35,000 final or current value and then you will add 2,000 which was wrongly included, charge depreciation of 20%. So in this way you can follow any of the method. First method was fixed base method, second method was diminishing, and here in our question it has not been described which method to be followed. So if you see the same situation in your papers, you are very open to opt method number 1 or method number 2. And just be very sure that if you will apply any of these methods, there will not be any effect upon balance sheet. Balance sheet would be equalized either by following method number 2 or method number 1. So there would not be difference. So be very sure, be very clear, be very confident. But now here our problem is this net profit. And we don't know what method of depreciation this book writer have opted. So for the time being, we are leaving this second method and just supposing that he had followed this method of depreciation where current value, diminishing value, declining value has been taken for the calculation of depreciation, while this 2000 is nothing with the concept of fixed base or declining. This was actually an adjustment where we had decided to add it. So let's calculate the depreciation. First 35,000, we will add 2,000 which was wrongly included and then we will take 20%. So we have got the depreciation of 7,400. Now let's come over operating expenses side and here depreciation of furniture would be mentioned and we have calculated 7,400. Look at here, this was depreciation 7400 and we have written in operating expense side as well. Both effects are completed. After depreciation, this was sixth number. We have completed now 7. Write off discount on debentures. Please note it down, preliminary expenses or discount on debenture. By concept both are same. These are supposed to be written on asset side. But we are asked to write off how much? Write off discount 1000. So only 1000 would be mentioned in operating expenses and the remaining would be written in current asset side. Here we will be mentioning discount on debentures and what we will do, less write off which was 1000. Both effects are completed. After discount on debenture we are number 8, dividend. Dividend is part of appropriation side. So here we are going to calculate it. For that we need share capital. Let's get back to the question and we will search for share capital. Look at here, equity share capital is 4 lakh while dividend is 5%. So 4 lakh 5% would be calculated and in this way we will complete calculation of dividend. Once again, what was 4 lakh? Please be very careful. Dividend would always be calculated upon share capital. So 4 lakh was amount of share capital and 5% dividend was described in adjustment. Dividend is calculated. Now you will go to current liability side and here you will mention dividend. 20,000 we have just calculated would also be shown in current liability side. Alright guys, so this was adjustment number 8. Now number 9, provision for taxation. Again it is also part of appropriation side. So here provision for taxation is mentioned. Provision for taxation is part of taxation is part of appropriation and now we will see how much amount of provision for taxation. 8,000, just mention 8,000 in appropriation side and then you will go to liability side and provision for taxation would also be mentioned over here while its amount was 8,000. These both amounts are directly be written since no add or subtraction is needed. Similarly, this 20,000 is also supposed to be written outside, no add less is required. So you can see appropriation debit and liability side for these adjustments. We were at number 9 and now number 10. Technical know-how write-off, again write-off. So just like preliminary expenses, discount on debentures, and right now technical know-how. So mention write-off technical know-how and here discount on debenture we may write off as well. So now there is a debate about how much amount we will be writing. It is said to write off over a period of 15 years. Look at here, We are related with only 1 year, 93. And technical know-how is mentioned over here. Total amount is 150,000. Okay, now come over here. Look, total amount was 150,000. This is for 15 years. So what would be the amount of 1 year? We will divide it with 15. Amount of 1 year would be there 10,000, and remaining would be written in asset side. Technical know-how amount was 150,000, and we were asked to write off, and here total amount was 150,000. We were asked to write off 10,000, and here we have calculated how this amount arrived. Look at here, 150,000 divided by 15. So this amount would be subtracted in asset side, mentioned as less, remaining amount would be considered asset. Okay guys, 10 adjustments are completed. Now we are going to see 11th adjustment. Salaries and wages include 10,000 being director remuneration. Look, you are paying salary to a peon or a clerk, or you are paying to CEO or director. That is by nature same sort of expense. So if they have included director remuneration in salaries, there is no harm. There is no technical difficulty to write director remuneration in salaries. So there is first option, skip this adjustment as well. There shouldn't be any effect. Otherwise, you can segregate. Outer column you will write the same amount, inner column you can change. And since inner column has no impact upon calculation, so we are opting the option of skipping it. Alright guys, all adjustments are completed. We are now going to start putting each element present in trial balance, and we'll transfer it to financial statement to the relevant parts. So let's start. First is investment. Let's go to asset side. Investment, see it is reserved. 50,000 is amount. Just write down 50,000 in asset side. After that we have purchase and sale at the same time. So please note it down. Purchase is your expense. Expenses should be written on debit side. So this is your debit side. 490,500 is your purchase. Write down 490,500 in direct expense, cost of goods sold side. On credit side you have your sales 670,350. So here in direct income side we will mention 670,350 as our sales. Alright guys, now after sales we have packing charges. We'll go to operating expense side, and here we will mention packing charges. Amount of packing charges 18,000. Let's mention 18,000 in operating expense side. After which we have delivery expenses. Again, delivery expenses, post sale expense, that is why we are choosing indirect side. Delivery expenses 35,400, and that would be mentioned in operating expense side, indirect side. Stock, since 1st January is written, our last date is December, so it means it's opening stock, and place of opening stock is already fixed. And here you can see opening stock is 145,200. Write down 145,200 in direct side or cost of goods sold statement. After opening stock we have salaries and wages. Salaries and wages the place is already fixed. Look at here. So you will write 52,000 of salaries and wages in operating expense side. 52,000. After that we have rent and rates. For that our operating expense side is ready. Let's see how much amount of rent and rates is, and there is a trouble of mentioning it. I think rent rates 17,500. Let's mention 17,500 in indirect side. After rent and rates, we have freight and carriage, and here again there is a debate. Freight and carriage, if they are inward, that would be considered direct expense, and if freight and carriage is outward, that would be considered operating expense. And it has not been mentioned over here whether it is out or in. Now there will be a question since answers are available over here. So how we come to know that if freight and charges are not mentioned, whether direct or indirect, how would we decide it? So for the time being, it is written beside salaries, indirect, rent, indirect, freight is written beside them. So we are just assuming, we are just supposing it that this freight and carriage is out. So we'll go to operating expense side. Freight and carriage would be mentioned over here. Although this should be the part of direct expense, 8,200, but since it was not mentioned, we have decided to write it in operating expense side, 8,200. Freight and carriage is completed. Then we have final dividend. For that, we will go to appropriation side, and there we will be writing dividend, and it was actually final dividend. Better to mention that it is final dividend. Amount of dividend present over here, this was present at here, final dividend 92, and the amount mentioned is 12,000. So here 12,000 would be written, while let's mention it is final dividend. One second, we need a spacer. Alright guys, final dividend is mentioned. Now let's see next, interim dividend. No matter whatever kind of dividend, we will choose the same place. Here interim dividend would be written. Amount of interim dividend is 6,000. Although it is not correctly aligned, and that would be a great problem, because a single amount, if we have written in a wrong way, we will have to search whole of the question to see which amount has been written in a wrong way. So we have written interim dividend, that is 6,000. Okay, let's see what next is. Discount on issue of debenture. I think it is already mentioned. Discount, okay. We have written discount on issue of debenture directly over here. This was written off. And let's go over here. This is discount on issue of debenture. Total amount you have seen that it is 2,000. So let's write 2,000 in asset side. Okay, here we are going to write 2,000 in current asset side. Note it down. total discount on each of debenture was supposed to be written on asset side, but some of the amount was written off, so remaining amount would be present in asset side. Alright guys, so final dividend, interim dividend, discount is written. Next is preliminary expenses. This would be part of asset side. Understood? Technical know-how, preliminary expenses, or discount on issue of debentures. All three items are actually asset until they are written off. Let's see how much amount of preliminary expenses, that is 1000. Alignment is so poor, it is very difficult to judge exact amount. Now you can see that preliminary expenses are written over here and amount is going upward 1000, because you can see that investment amount is up due to misalignment. Then we have bill receivable, part of current asset, and here you will mention bill receivable, and we have written already. Okay, this is bill receivable already mentioned. Let's see how much amount, that is 41,500. In current asset side you will be writing, since it was already written, after bill receivable, here we are, note carefully, we have interest on debentures. Bill receivable was 41,000, interest on bank overdraft 7,800. So let's go to other expense side. Interest on overdraft would be mentioned, and amount will be very careful in looking the amount, because one up we will have to go. So this is the angle, 7,800 is amount of interest put on expense side. After interest, debenture interest, this debenture interest would be mentioned over here in indirect side, debenture interest, and you know there are three parts. First, in trial balance, amount mentioned over here is 3750, so you will write 3750 inner column, and we'll wait for percentage and debenture later on. Next, sundry debtors and creditors both are mentioned at the same time. Debtors are asset, asset should be mentioned on debit side. So this 50,100 present on debit side is actually the amount of debtors. So let's go in current asset side. Sundry debtors would be mentioned. Amount we have decided is 50,100. In current asset side, you will mention this amount. Alright, then we have creditors. It is part of current liability. So here, sundry creditors, amount of sundry creditor is 87,850. You may have some objection why I do not call it 87,850. So it's a long sentence, and while writing amount is not important to describe it, that is why I read amount in unconventional way, 87,850. Sundry creditors are posted. Then we have freehold property. We'll go to fixed asset side. Over here, freehold property would be recorded. Let's see how much amount of freehold property, that is 350,000. In fixed asset side, we are going to mention this freehold property. Then we have furniture 35,000, I think already written 35,000. After which we have capital of 4 lakh. So we'll come to fixed liability side. It is actually share capital. It may be called issued, subscribed, and amount of this share capital is 4 lakh. So let's mention 4 lakh, and later on we will see if authorized capital is also present in this question, would be written over here. Share capital mentioned. After that we have 5% debentures. So let's come to fixed liability side, and here you will mention 5% debenture. It's optional, you may write or you may not write 5%. Amount of 5% mortgage debenture 150,000. First we will mention 150,000 over here. Now come back to our operating expense side, and here we have left the space add outstanding interest. Outer column, lower outer column, we will calculate this percentage upon debentures. So 150,000 amount of debenture, and then we will take 5%. So this would be written outside column at lower side. The difference between these two amounts would be considered outstanding, and that is 3750. Now come to liability side, and you will mention outstanding interest, and that will be 3750. This one 3750, difference between outer and inner column, and that would be considered as outstanding interest. So 5% debentures completely recorded. Taxation advance. Advance might be taken or given. Since it is written on debit side, it means it's your asset. So we'll go to current asset side, and we'll mention taxation advance. Let's see how much amount of taxation advance. 15,000. Mention in current asset side taxation advance. We have dividend interest, but note that amount is present on credit side. So it is not appropriation natured expense. Dividend is now be considered as your income. Dividend and interest 4250. Let's go to other income side, and here dividend and interest is mentioned. Let's see how much amount, that is 4250. Write down in other income side 4250. Okay, after dividend we have profit and loss account. So we'll go to appropriation side, and here you will mention profit and loss account. Okay, over here this is your income. So let's see how much amount of profit loss account is. That is 28,500. Write down in appropriation credit side. Profit and loss account is cleared. Bank overdraft will go to current liability side, and here we will mention bank overdraft. Amount is 150,000. So we'll go to current liability side, and we'll mention 150,000 bank overdraft. After that we have technical know-how. I think it is already mentioned. Technical know-how written off is written over here, and 150,000 already mentioned. So thankfully each and every element present in trial balance have been transferred and posted to financial statement different parts. All adjustments are written. It means we are now ready and open to start our calculation regarding profits. So first, no returns are mentioned. It means sale would also be considered as final sales. Now let's calculate cost of goods sold. First part, opening stock plus purchases less wrong included less closing stock. Cost of goods sold is over here. No direct expense, so you may write 0. After that, here you will take the sum, and luckily no other expense is present, so this would be considered as total cost of goods sold 488,200. Then to calculate gross profit, this cost of goods sold would be subtracted from sale, means sale less cost of goods sold 488, and we have got our gross profit 182,150. Answer of this would be available in the book, so let's check it out. So here we have gross profit 182,150. Our answer is also 182,150. So luckily 1 out of 5 parts we have solved. Let's transfer our focus to operating expense side. So here we have some of the adjustments. Salaries less wrongly included. Okay. No other adjustment is present, means we can take sum of all operating expenses. After that, there is no operating income, mark 0. Then we have only one other expense and only one other income. So let's calculate our net profit. So first we will go to gross profit, and then we will subtract operating expenses, and then we will add operating income, again subtract other expense, and then add other income. So what we have got is 17850. Answer of net profit is also available. Let's check it out. Over here you can see net profit 17850, and our answer is also 17850. So thankfully 2 answers are corrected. For an accountant, as a student, this could be the best moment when you have got your answers correct. So 17850 is your net profit. Let's start our calculation of appropriation balance. So first, let's take sum of all appropriation expenses. Now we can start our calculation for appropriation balance. For this, net profit, add profit and loss account less total of all expenses. So finally we have got 350. This is appropriation balance. Answer is available in the book. Let's check it out. So what we have got is 350. This is appropriation account. That means we have completed all 3 parts present on left side. We will now focus upon liability side. First, we will add appropriation balance in liability side, that was 350. Let's calculate final capital, and now we will see total debentures. Only 2 items are present in fixed liability side. We will take sum of both. So total fixed liability ready. Now take sum of current liability side, that is also ready. No reserves are present, mark 0. So let's take sum of all these 3 items. what we have to do, sum of fixed liabilities, sum of current liabilities, and sum of reserves. So these three items would be used to calculate total of liability side, which is 819950. This is also answer of balance sheet, and this is given in the book. Let's check it out. So balance sheet answer is 819950, while our answer is also 819950. It means liability side is also completed. We have taken sum of current and fixed liability beside reserves. Now let's start calculation for fixed asset side. Over here we were having furniture. There are two elements related to furniture. Less add installation expenses and less depreciation. Other asset is freehold property. There are only two assets. We have taken sum. This is sum of fixed asset. All right, then let's see what adjustments are needed in current asset side. Bill receivable, less irrecoverable, discount on debenture has no adjustment, write it outside. No, we have total amount of discount on debenture less its write-off amount we have written outside. Then we have 150,000. Let's written off this 1,000 preliminary expenses. After that, no other adjustment is present, means we can take sum. So here, let's take sum of all operating expenses. Investment, there is only one amount, total would also be same. Now what you will have to do, total of fixed asset is ready, total of current asset is also ready, total of investment is also ready, and sum of these total would be equal to total of grand total of asset side 819950, and look at here 819950. It means our asset side is also ready. Liability side 819950, while our asset side is also showing 819950. It means all of the answers are now matched. So let me show you what we have done. Although almost same time has been taken, question was little lengthy. You can see there were 11 adjustments and several elements of trial balance. So first we have calculated gross profit 182,150 and answer 182,150 was there. Then we have calculated net profit 17,850 and here you can see 7,850. Last part of left side appropriation 350 and answer was 350. Balance sheet 81,9950, 81,9950 asset, 81,9950 liability side. So all parts are completed. My dear fellows, my dear student, I am very openly accepting this fact that viewing a video lecture is not enough at all. You people have to understand this. Viewing, although necessary for your learning process, but if you want to learn completely, you will have to practice by yourself. So it is requested to please practice this question for 3-4 times, and after practicing, if you still feel anything difficult, you are very open to share your problem through messages, text or comments, or you can directly meet as well to share your problem. I will humbly be trying my best to answer your question quickly. So thank you very much for your time. It's time to say goodbye and it's time to end our lecture. Thank you very much. Allah Hafiz.